Hey there! Welcome to Trade Love Academy's weekly ES or MES futures breakdown. Hey guys, I'm Fatima, and I'm going to guide you guys through mastering the Micro Mini S&P futures. So if you're trading from SPX CDFs or you're just looking to sharpen your trading game, you are in the right place. Each week, we are going to break down market structure, trade setup, risk management, and give you some tips to help you trade with confidence and consistency. So whether you're a beginner or experienced trader, my goal is to help you navigate the futures market with clarity and precision. All right, guys. So I know today's Thursday. It is the 10th. I know usually we do our classes on Wednesday, but yesterday it was my kid's birthday. So just really spent some time hanging out with him. I can't believe I have a 14-year-old. It's like, what? It's so surreal. How's everyone doing today? Let's see. I know it's a different time, so we might have a smaller group. No worries. We're going to do the same exact thing we do every week. We're going to take a look into the market, see if we have any high impact news going on, take a look at market sentiment, read read up on the markets there so we know what's going on in the streets, Wall Street. So, and then we'll take a setup for today, see how we should, kind of map out the day's kind of plan, and then we'll go over what happened last week in the market, that trade, and how we could have set that trade up. Alrighty, guys, so let me go ahead and share my screen. Let's see. Okay, so FinViz, this is our our visual map of the markets here. So we have it's been green today. It's been green today. So if you guys recall last week, the market, we were reading up, we were expecting, selling. Our trade, popped straight up into that buy, right into that 50, 61.8 kind of region that we were looking at it to, for us to take profit because we were in a buy. We had some headline news came, so then it retraced. We were looking for a little sell there. The market sentiment was just, we were going to sell. Cool. But then, of course, we had some headliner news. I forget. Someone said something about I think it was war, ceasefires, treaties, something good came out, and that baby just shot straight up. But then the very next days, it's just been a bloodbath. But yesterday, we'll speak about that. So anyways, market's looking nice and green. Today, I know you guys at 8:30. So remember, we're transitioning from Forex Factory and getting over to Econo Days so that we can get some more in-depth information and see what other news coverage we have besides, it just relating to the Forex market. But while we are transitioning, we want to understand what this means. So today, you guys know, Thursday, we always have core CPI news coming out, high impact news. When you are in Econo Day, and I'm going to drop that link in the chat as well. Oh, wrong thing. Hold on, guys. Ooh. All right, let me try one more time. I have 3 screens working over here. Okay. Alrighty. So, yep, CPI. We have our jobless claims coming up. You guys know, double click those links there, and it'll give you some more information into, what is CPI, why we're looking at it, what was a prior event, like was it within census, did it underperform, did it outperform, to kind of give you a heads up of what may happen today. Of course, we can never predict the market, we just know what it may have the potential to do. We have our upcoming dates. I'm sorry, jobless claims. It's every Thursday, CPI every month. Correction. And, jobless claims is also, we look at that as it's going to be, same thing as unemployment claims. So we have some high impact news coming out in a little bit, which is perfect. That gives us a chance to kind of go over our fundamental analysis, waiting for that news to play out, markets to correct themselves, and us to get into a great trade. I also want you guys to, I'll drop this link as well. I want you guys to look at the companies that make up the stocks, and those companies that make up all those stocks within the S&P 500. And this is a list kind of with all these components here of the S&P 500, and they're listed by the weight, like, NVIDIA, the impact that NVIDIA has, can have a strong, just that stock itself can have a major impact on the overall index. So we want to make sure that you guys know what all is in here whenever they're having maybe earnings or anything like that. So take a look at those things. I would kind of pay attention maybe to the top 10. So we have Microsoft, Apple, NVIDIA, Amazon, Meta platforms, Berkshire Hathaway Class B, Google, which is Alphabet, Tesla, Broadcom. So whenever JP Morgan Chase. So whenever we hear about these companies, we definitely want to keep our ears peaked up because they may have an impact on the overall effects of this indice. And remember, we can't ever time the market. So just because market sentiment may say that, we're selling, or, we feel like the market's going bullish, or whatever the case may be, that doesn't mean that that's happening today, right now in the markets. We just take this information, tuck it in the back of our heads. So while we're trading, because we make money, buying and selling. So, but we just want to get the overall market sentiment. Alrighty, who's with me? Who's with me? If you guys got those links in the chat, if you guys took a look at our news today and you're ready to get started, you guys drop your favorite number in the chat. Drop your favorite number in the chat just so I know that everybody's awake, everyone's with me. You guys understand what's our plan for the day. Okay. Oh, that's my favorite number too. That is my favorite number too. Awesome. So if you're ready, that means you guys have your charts out. We'll be going in our practice account here with Top Step to place our trades. Let's just go over market sentiment here and kind of recap the market, read some information from Bloomberg before. We want to wait till that high impact news kind of plays out and then get into the market. I'm never going to suggest us having any trades on, even if it's within our practice account, because, we're using our practice account to practice our strategy. I always, even though I do have a live account, with Top Step, I always place my first trade of the day in my demo account. It just helps me kind of get the, nerves out, get that first trade out of the way, check to see, if I'm in with the proper contract size. With these markets these days, we're kind of used to back in the day, and that was just like last year, a 3-minute candle, 5-minute candle in SPX, S&P 500 might have been just, 5, 10, not even 10 points, but now a 3-minute candles. Oh, this baby, it's been crazy. So we just want to test the waters first before you jump into the live markets. Alrighty, so let me see. Let's get rid of some of information I don't need. Alrighty. Okay, so 5 things we need to know. So first thing, U.S. stock futures tumbled and the dollar weakened as traders shifted their focus to concern that the trade war will bring lasting economic damage. Equities and futures in Asia followed a massive rally in the U.S. when Donald Trump shocked traders by pausing most of his tariffs. Treasuries gained after a tumultuous session. So, a weaker dollar just suggests global investors are pulling away from US-based assets, just that added pressure to US stocks. So that doesn't mean that we can't still be buying. Their pullbacks happen all the time, but we wanted to get the overall sentiment of the market. Does this always translate into our minute-by-minute trading and things like that? No. But at least we know, what the market has the overall potential to do or what kind of the big dogs are looking to happen. Alrighty, so Trump's dramatic U-turn has isolated China as the primary target of his trade offensive, significantly narrowing Beijing's options for immediate de-escalation. Chinese traders plan to meet today to discuss additional economic stimulus. So, global equities, as we were talking about, they soared. So they've been buying, but that rally, they're saying it's a little fragile there, especially with the treasuries gaining, which when the treasuries, and we'll get into the treasury market sometime, this year. I don't want to over stimulate you guys, but that really signals investors' caution. So Trump's tariff pause kind of sparked a short-term bounce. But still, really, a lot of uncertainty remains in the market. So we may see, us ES traders may see a bullish open, but definitely want to be very, very cautious of reversal patterns and false breakouts or fading the gaps, those type of setups, especially when we're overlapping kind of the global market hours. So, alrighty, so the Fed is prepared to hold interest rates steady to minimize the risk of tariff-induced risk in inflation, even if the job market softens. So officials are signaling publicly that they're ruling out cuts that could act as an insurance policy against a slowing economy. It's kind of, straightforward there. He took a U-turn in China. Beijing's been forced to consider an economic stimulus, which could temporarily kind of boost market confidence. I know a lot of you guys still trading GJ and a lot of those pairs there, those Asian pairs. So just be cautious. And for us ES traders, that might create like a temporary bullish push, but it's important that we track and, follow through the reaction to Chinese actual policy moves. So again, that's just us keeping, some type of news outlet in the background while we're trading so that if there's any kind of headline or anything new comes out, we're right there and while we're trading, can make those adjustments. And, we see big pushes or pops and huge candles. We're like, wait, what happened? 9 times out of 10, go look at Yahoo Finance or MSN, I don't know, Bloomberg, whatever you use for your information and see exactly what happened there. All right, U.S. inflation likely cooled in March, thanks in part to a drop in energy costs, offering some relief to consumers before tariffs hit the economy. And the consumer price index is seen rising 0.1%. That's what the economists say. And the report is due at 8:30 a.m. in Washington. All right, so we still got a couple minutes, only 8:17. So, Fed's just maintaining steady interest that the rate signaling is balancing inflation risk with slowing growth. So, rate stability definitely could calm the markets. But if the job data isn't too good, then our sentiment can shift. So we'll take a look at that. And I know it's a lot of information, but it's just a little breakdown there. But as far as this in the U.S. inflation and the drops in energy, that could support equities because it could reduce the pressure on the Fed to raise the rates. So we'll see how that CPI report and the volatility in that window. Let's see how the market moves, and we'll play that out. Alrighty. So Taiwan semiconductor quarterly revenue rose a larger than anticipated 42%, reflecting a strengthening demand for AI servers and smartphones before U.S. tariffs kicked in, and the market that marked the fastest pace of growth since 2022 for the company, which is the main chip maker for Apple and NVIDIA. Apple and NVIDIA, they have some of the highest weight within that indices. So, they're the key player in the tech supply chain, and its strength boosts sentiments around like tech heavy stocks like Apple and NVIDIA. And AI, it definitely remains has that bullish theme in the market. So, this kind of earnings report can lift the tech sector within the S&P, and it can give, the S&P futures an upside bias. So we'll see how that weighs on the market. So I know it's a lot of information. I know you guys are like, I've been reading these things for years and years and years. In the first year, I'm not really all that into the finance industry and things like that, as far as all these in the government and all these little moves and things like that. I just like to trade, but within trading, we have to know these things. We're in the finance industry. So I know a lot of people always DM me after this and like, oh my gosh, I don't understand what this is saying. It takes time, you guys. You just look it up. Look up these kind of things, read articles. It'll get more clearer as you just kind of follow these news events. You start to understand now, when I turn on Bloomberg and things like that, and whoever's speaking, it's like, oh, okay, that's what that means. Oh, okay. Oh, I heard about that. So we'll get it, guys. Okay. You guys ready to look at the markets? If you're ready to look at the markets, drop some 8s in the chats. If we're ready to pull out our charts, you guys, we're done with the kind of fundamental analysis here. We read everything Trump and the global economy has up its sleeve and has been, doing in the last couple of days, and we're just ready to trade. Only see 2 8s. Where y'all at? I know Thursday throws everyone off. It's all good. Let's get over here. Okay. So let's start with the top-down analysis. This news has not come out yet. It's 8:21, but as we can see, we're in the ES-mini futures on the 15-minute time frame. Our RSI is oversold, and we are near the S0. Can anyone tell me what are we looking for near the S0 when these are our pivot points, our pivotal zones? What are we looking for, buys or sells at this point, typically? When market reaches our S0, -1, -2, -3, what area? We're typically looking for buys, exactly, because this is supposed to be a support zone. And in the past, it has. Right here, we had buyers stepping in. Let me zoom in. Okay. Support right here. Buyers tried to step in, support here as well. We see these wicks here. Sellers were unable to take this, lower here. This was our support area. However, now also, and what else do we see? This is Kelly's kind of favorite EMA, isn't it? This 800 EMA here is a major area, is a major support kind of EMA, right? But when we see our RSI being oversold, it's not really too much overbought, but being overbought, kind of coming into this region. It really didn't get in that area, but we see it crossing down. If we didn't have this set up, and if this was just as an area chart, and we just saw our lines here, our EMA, our RSI crossing kind of signifies that we're going back in the other direction. Crossing going down, we're selling. When we're oversold, when we're crossing going up, kind of like in this region, that's giving us kind of an indication of buying momentum, selling momentum, just to put it in really simple terms. So Ty always asks, how do we know that the market is not going to just keep, when it comes to these areas, that it's not going to just break this support area and keep selling? This is we don't, we have to wait. We have to see how the market is going to play out. Well, we can look at the order books and kind of look at the order flow, see if there's more selling. We can kind of weigh it, see if we have more selling buyers, if we have more seller bids and asks, those type of things. But a good indicator, just looking at market structure and our indicators here, this kind of looks like price might blow through this range here and sell. Of course, this news event here is very critical, and we'll see, if it, uses this, we were talking about fake breakouts. So we'll kind of see if the market will do like a fake breakout here, touch this area, bounce back up before, it continues down, or if we have a breakout to the upside. We never know, just because of this headline, especially just because of all this headline news that's been happening. We'll have like a break to the downside. Someone comes out, they tweet, they say something, boom, we're shooting back up. So we just have to really follow momentum. But the market's going to overall, follow market structure in the long run. You might get caught up in this little, these wicks and this major movement here. But overall, the market is going to find balance and find structure eventually. Okay, so we see we have this huge engulfing candle here. What do we know about engulfing candles? What does the market typically do? We have an imbalance, huge candles, Yep, it comes back. The market typically comes back to that area. We don't know when, but right here, we typically will see the market come back to about this area, kind of where we broke off. What is this price point? 5107. So we'll take a look at the 5107 area as an overall TP once price breaks into this sell, if it goes back down. This is an area that was once resistance. Price broke above that, made higher highs. Let's take a look to see if we have our fib. Here's our highest point. We'll go back down to our lowest point here. This is our high at this candle here. And I'm just going to bring it across so that we can kind of see these points here. Why didn't I use this low point? Why didn't I use this low point? We can use this lowest low here. That's fine. But sometimes we have to look exactly, what the market did. The market made a low and it made a high. If we would have placed a fib here, it kind of retraced already back down to what probably was the 786 area. It made a higher high and a higher low. If we take a fib from here to here, kind of pulled back already. So we have to look to see if our fib kind of already played out in that area. But at the same time, wherever you place your fib, because the market is going to go, to sometimes you might just, have your fib in an area. You have your areas marked up. Someone else has another fib. They have their areas marked up. They might be looking to take the market to the 50% area. You might be looking to take yours at the 61.8. You might be on the 5-minute time frame. Someone else may be on a larger time frame. So, don't really get caught up on, because that's what kind of deterred me from fibs. Why is she using this low instead of this high? Why is she using, whenever I was being taught that, it was kind of confusing. My suggestion is identify your highs and lows, and wherever you have your highs and lows, however you're seeing the market, place your fibs there. I'm liking to take the market to the 50-61.8 area. Using this low, using this high, the 50-61.8 area is the same exact area that we were just talking about. If you just use basic market structure, if you just used, naked charts as well, this was just our breakout point. That's the 50-61.8 area. If I was using this low here, 50-61.8 level kind of shift just a little bit, right? Now it's just this point, but these are literal points. You get what I'm saying? Don't really, if you use this low and we use this high, those are just points in the market. If you use this 61.8 level, it's still the same area. We still kind of had this same kind of zone here, same kind of price point. Wasn't like, if you used this low, you were going to be having some crazy other kind of target area. It's still within the same range. So don't really get too mixed up on exact levels. These are areas, zones, things like that. So I had a student who that was really just something that was really kind of just holding her back, kind of just overthinking it, trying to really match it up. I'm like, take your highs, take your lows. And once she just kind of got over her own head and having to be exact, or, well, my friend is, when I was marking up with so-and-so, they took this level, and then I can't see why they took that level. I would have taken that level. And when we did this kind of matchup here, it was like, well, your levels and her levels, you guys are still kind of in the same place. You're still in the same town. Might not be on the same street, but still it's not like you're in another state. Okay, so this is our support area. We kind of had this bounce. It's to the upside. So we'll see how this plays out. Let's see if it's breaking out of this high. The market is able to break above this high here. CPI news, jobless claims. Remember, we were talking about false breakouts. So we'll see how this market, this is our 15-minute candle, nice, huge engulfing candle. We are at the S1. This was support. Well, this is support here. The market was looking like it was crossing down and going to, continue to sell and break that area. So we marked up our zones. We know, okay, well, if it does break below here, we have a potential target area down below. But we have to see if we're going to get kind of that pullback. You know, I put fibs within fibs. So we'll see if the market comes back up to our 50-61.8 area here. If it breaks above there. And if it does, and we start making higher highs, we have price coming back to the R7, the R8, which is our previous high area. Are you guys starting to see how to map out your trades? We are not, you know, getting caught up with the market's going to buy, the market's going to sell. No, if the market buys, if it breaks this area, this is confirming a buy, price is making higher highs, it has the potential to go to this area. Okay, the market is making lower lows. It's broken our support. So now we map out the market and see, okay, it has the potential to go to this zone. We are just following the market. And in these times especially, we don't want to get too caught up. We definitely want to follow the trend, of course, the overall trend. This is why we are on the 15-minute. We'll follow the 15-minute candle here to kind of give us an idea of the overall trend in the market. And then we're just, you know, mapping out our key areas. That's always the first step. You map out your key areas, where you think the market may go. Where do we see, you know, interest? Look at this wick here. A lot of liquidity in this area. We had a lot of wicks here, a lot of liquidity here, but can we get a candle close above this zone? If we do, looks like we might have a little, same thing that happened the last time, buy to the 786 area. We'll see if it keeps pushing up. Then we see how the market reacts once it comes to this area of resistance. Does the market, you know, make that kind of M formation where we come up, pull back, come back up to the previous area of resistance, and then shoot back down? Does the market continue to make higher highs? You never know. But whatever it does, we know how we're going to move when it makes that move. We just need that confirmation. Right now, we haven't seen price make any higher highs or any higher lows with this move. Has it moved? Yes, it has. We go to the lower time frame. This 15-minute candle is 47 points. That's huge. That's a big move. But did it make a significant change in the market? Did we make a higher high? Did we break, you know, above, did we come out of this range? Did we come out of this range? Did these candlesticks make any significant movement? Nope. We did not. We're still just right here. Let's go to the 5-minute time frame. Let's go a little bit lower. See what's going on here. All right. This is our 200 EMA. We know that the 200 EMA can be used as support or resistance. Right now, it looks like it's being used as support. Why do I say that? Because the market has been unable to break below this level here. The market has also not been able to break above this area here. So we're just bouncing around. You can play the range, you know, on a smaller time frame, you know, the 1 minute, if you wanted to take this buy, you know, take this sell back down. But I would rather wait for a confirmation, some type of break to either the upside or the downside, so that we can kind of formulate and get in the market. But right now, it's just coming to this level, bouncing up, it's kind of resistance, selling back down, bouncing up here. How many people, though, would have come to the smaller time frame and took this trade and kind of played with this range here in our RSI? How many people would have traded this on the smaller time frame. Nobody? Everybody's smart. No risk takers here. I mean, it's pretty clear when you look at it on the 1 minute though. You can see we had the RSI pushing up, giving us some color here. Rejection. We had this huge buy. It comes near the R7. That was a previous area of resistance. This huge red engulfing candle would have been a good indicator to get into that sell if you were just playing this range, because we had, and then also our RSI was giving us selling momentum, making lower lows, prices below this area. Now, it's back down to an area where, you know, it typically bought at before. Now you just got to see, okay, is it using this area to do the same exact thing and we're just bouncing around and I take my buy here? Or is it going to, you know, break this level of support and continue to come down lower into this S1, S0 level? Let's see. No, not sell. Sorry, low. Excuse me. Low. All right, so we just have this kind of area. You know, if you were going to take this buy, we would want to see kind of a nice engulfing candle. We have our RSI kind of giving us some buying momentum here. Let's see if it comes back up to this range. I'm pretty sure, again, we're going to practice using fibs within fibs within fibs and on lower time frames, just because that 50% retracement area, whether if you're buying or selling, is just, ES really respects market structure. It really respects different levels. Right now, to me, this isn't a really tradable area of the market right now. I want to see a nice, not just a fake out to the upside out of that, you know, push. I want to see the market actually break above, you know, this high area to give me that signal for that buy, or kind of really just break below this area, not just these little wicks to signal that sell. Right now, we're oversold. This is where our market, this is where our order books come in. The depth of market comes in. Let's take a look.
The market is pre-open.
Thank you. This is the 4-hour time frame. Let's look at the, I don't really want to look at the 1 minute. Let's just look. Okay, the 15 minutes still giving us, you know, some selling, looking like it wants to cross down again. Let's look at our orders here. Again, this is in demo, so, you know, we're not going to have the most accurate order books. It is simulated though, so we should be able to gain some type of information from the market here. I love top step levels. Or if you're with top step, definitely have your levels on. They're really different levels. Let me see if I can tell us different things. Is that what this one? Is it the label name? Hold on. It's supposed to be indicator name levels. There we go. Alrighty. Okay, so top step levels, you get to see, it tells you where settlement is, you know, where price settled last night. our high from yesterday, low from yesterday. What else do we have? The week low, yesterday's point of control. So just really key areas on larger time frames, longer time frames that we should keep in mind as well. So we know how much we love levels. We love our pivot levels. So that's something also that I love. Their indicators, they do these, update these every day. Alrighty. So if you have your levels, that's just another extra. Let me take off my VWAP. We haven't went over VWAP. Let's just keep in. There we go. Just mimic what we have on Trading View. So price is really trying to get past, like we said, this 800 EMA. Still hasn't, buyers, see what buyers are doing. We have right now in this area, do we see how many orders, like the volume here and this price range? We just have so many orders, buy and sell orders. I wonder if we can pull up our book map on YouTube if you don't have the actual software yet, or you're still learning. Shout out to them. Definitely hit subscribe. That's been a nice little tool there while I'm learning. Save me a couple dollars before I grab that subscription. Alrighty, so now we see exactly why it's just kind of bouncing around here. It's just kind of just grabbing these orders for people that are trying to trade these little movements on the smaller time frames, just buying and selling, buying and selling. Let's go ahead and take a look here. Market's making higher highs. Let's see if it breaks below and makes this lower low. Let's see on, I'm just going to show you guys on a lower time frame how we could get into this market. Possibly. Oh. One minute still looks like it's making lower lows. It's broken below this area. So let's see if we can take our sell down here to 53.51 or 53. What's this? 61. So this area here. Go ahead and put in a pending order. See if it breaks. Just gonna sell to MES when it comes back down. Yep. Seven seconds. We'll wait till it kind of just comes back here, pops back up. Next candle opening. Up there.
Order filled.
Alrighty. I want to bring my stop loss. If price comes back up above this area, definitely don't want to be in this trade, because price is then what? Making higher highs and not lower lows. $51.61. Let's see. We'll keep it in this area. So we are risking $132 to gain $243, just in with too many contracts. Sorry, micro contracts here. MES. Looking to play this sell here. We're seeing that it's pushing below, making lower lows. Still we're buying and selling and just bouncing all around this area, but it's looking like, oh, sorry, I keep coming back to this page. Let me get out this tag on page. It's looking like slowly but surely, what did we do? We marked up where this high was. We marked up where our low was. We said that if price makes a lower low, we'll go ahead and get in there for that sell. we have a range, we have an area here, which was kind of this support zone. It's also our S1, S0 levels as well. And we'll see if the market comes back to these points, pops back up and continues lower, or, you know, we have to look at the time frames. It's also going to be around the New York Open. So in this market, you have your take profit area. If you have multiple positions on, you could possibly, you know, take off one while you're writing it down. A lot of times, just be patient. You might get wicked out or stopped out of a trade before it goes in your direction. That's honestly just what's been happening in the markets lately. We've been having to have a wide stop. A lot of times there are so many orders in this area. The market's just coming, grabbing those stop loss orders, grabbing those positions, coming back down, you know, in and out, because there's so much liquidity in the market. There's so much going on. There's so much uncertainty in the market as well. So, you know, if you're usually, I'm about to say lot size, if you usually go into a trade and you trade 5 contracts, you might want to bring that baby doll down to 2. You know, it's different times. So we want to protect. We are risk managers. We want to protect our capital, protect our profits. And so we're taking trades, but we're reducing our risk. And we're just waiting it out. And sometimes these counter trend moves, we're just going with the movement of the market at this point. So usually, you know, we would do our whole top-down analysis, see where the market's going, but the market's just been moving so fast lately that you kind of got to go with the momentum and just hop into these trades, just going with, you know, what we're seeing at that time. So you might have had an analysis and on the overall higher time frames, you know, you might have been looking for a price to come back to this area, buy to this area, but on the 5-minute, you know, you might be selling, and these selling candles, these 15-minute candles, they've been big moves. So, you know, this week, these last couple of weeks, I've just been in and out, taking a couple $100 there, a couple $100 here, you know, not really holding on to positions too long. And if I do, moving those stops into profits really early, because we're definitely not trying to give the market back any of our monies. The market has already wiped out several billion, if not trillion dollars this last couple of weeks. I know I'm everyone's favorite liquidity provider, but not today, not this week. Alrighty, so any questions? We have our trade on, let's see what time it is. It's 8:50. We can do a quick top-down analysis. I did want to speak about what happened. Well, I did kind of last week with that trade. We're looking at that sell. It popped back into our buy. So that's why we mark up these areas. So if we were in this sell and price came back and broke above this high, we're no longer looking for sells. We already established if it breaks this area, we're looking for buys. This is where, you know, we would take that trade to. So a lot of times we get off, we have a trade set up, it might go into profit and then bounce right back into another area. That's perfectly fine. We're not trying to be right here. We're just trying to take good trades. And so that's why we have areas that tell us if price comes to this zone, or if price does this, or if price does that, this invalidates my buy, this invalidates my sell. So have those already pre-marked up. So when the market makes those moves, you're able to think without emotion. You've already done the reasoning. You've already done the work. Now it's just like, hit this point. Let me get in. Touch this area. Let me get out. It made this low. So do all the thinking before you get into the market. Let's go ahead and take it to these candlesticks, this high there. It comes back up to that area. That's our R7. Alrighty, and we see that price is coming down, making lower lows. This, of course, is on the 1 minute time frame. Let's take it back to a more structured time frame. What's our 15-minute doing? It's coming back down here to this area that we marked off as support. We see that the buyers were unable to bring price above this price zone, this 54.20 level. It tried multiple times. This huge wick here kind of just gives us that indication that buyers are unable to take over at this price point. But let's see how price reacts. Does it even come down here to touch this 800? Just want to see how price is reacting at this level to give us an indication of how we move forward. All right, let's take it to the 4 hour. Let's take it all the way to the top. You know, with this market moving so fast, we needed to get into a nice little trade, but I always tell you guys to do your top-down analysis before you guys come on the class, but we do it together just so that we can see. Alrighty, so 4 hour time frame. What are we doing on the 4 hour overall since what day is this? All right, so December 18th, price tried to come above 61.66 here. It tried it again on January 24th. And then again on these days in February. It's been selling ever since February the 20th. ES has been making lower lows and lower highs and lower lows and lower highs. We've been getting little pops of those buys, but overall, we've been selling. We had a great couple of days buying in April since, you know, we started here on the 7th. And then again yesterday. Why is that? Because we have reached kind of this S0 level. So we have support here. Price bounced back up. And now it looks like we're overbought, crossing down. Does everyone understand, or you see why I say that? If you understand, if you can see the structure, the selling structure, the support, and this resistance up here in ES, drop a 1 in the chat. I want to make sure everyone is with me. Okay, 4 hour support here. It's bounced a couple times. It's pulled back. And now let's see. It's pulled all the way back. It's come back up here to this R7 level. And the last 1, 2, 3 candles, huge engulfing candle here, has been selling. We have this area. We have this huge engulfing candle here. We said that we were looking towards this kind of zone, wherever you had, you know, your areas here. In fact, on the 4 hour, this is a little bit clearer, our lows and our highs. Our low to this high up here, let's bring it across. Oh yeah, see guys, still the same area, 50, 61, 8. This engulfing candle, if you really want to push it, if you see that the market is still making lower lows, pushes below the 61.8, you think it's coming back down to the 786, or, you know, filling up this candle all the way to this, like a full corrective move there, coming down to full this candle, down to 50.74. That can be your overall TP. You know how we break off our TPs into like TP1, TP2, TP3, take profit zone 1, take profit zone 2, take profit zone 3. It's all based on where we're seeing, for instance, if it, in this instance, this is a sell, where there may be potential areas of support, meaning if you had multiple positions on, this may be where you take profit, pull off one. You know, if the market keeps going or if it pulls back, you've already, you know, taken a little profit there. So you're able to let your other, you know, trades kind of play out. Once it reaches another zone, that might be take profit too. There's going to be a pullback, you know, support, might want to take another one off. So that's why, that's how we use those take profit areas and why we use them, because there may be a little bit of congestion in the market at that point. Alrighty, so right now we kind of see price. We've had these selling candles. We see that the price is kind of trying to come back down and make this move. It's sitting on this 50. It's unable to break below, has been unable to break below this 50 EMAs. So that can, we want to know why things are happening in the market. Why is it just, you know, consolidating right here? Couple of different reasons, but also because on a bunch of the higher time frames, prices right now sitting on the 800 EMA at one price on one time frame. On the higher time frame, it's near a 50. You know, so we have all these things as well that are causing. Look at the hourly time frame. Selling, huge selling candle. Okay, let me remove some of this. And this is, and now it's near our 10 and 20 EMA. So kind of stuck in between these kind of bands here. So just pushing around on the hourly time frame, very common time frame. What's our 30-minute doing? We use this for momentum. We have a cross. So we have an EMA cross. That's great. On the 30-minute time frame for the 10 and 20 EMA. That's our short-term trend EMAs. 20 being this yellow, 10 being this this blue line here. We have this cross that's signaling that now we are selling. So we got that on the 30-minute time frame. Price is making lower lows. We can see it clearly. This was a high point here. We made a new price broke below this support. To just mark it out. Sorry, I'm a visual person. If you guys can see, okay. Price broke below this support, made a lower low. Price came back up here, new higher high, higher low. And what is it doing? It's just steadily coming down. We know that that S&P typically, sometimes as it come up to the R8, it really likes this R7 and this S1. So if you use pivots, trying to take price to the R8 or, you know, down to the S0, sometimes that doesn't always happen. Keep that in mind. All right. You see how we just went to the overall time, to the higher time frames, just so that we can get a look. Did it knock us out? Oh, it knocked us out. It went into profit and then knocked us out. Still looking for a sell. Still coming down. This is what it's going to do. No biggie. Let's take a look. Sometimes we try to get in at the break, but then the break is just support. Price comes back up and then it goes back down. And it's just been doing that. So do not get frustrated. That's another reason why we take our first trade in our demos. Do not get frustrated in this type of environment. This is a very hard environment to trade because even though on the higher time frame, it looks very clear. Oh, duh, of course I should be selling. When you get into the lower time frames, and that's why I said you're having to have a really, if you don't want to get knocked out, a really big stop, like a range there, you're going to get knocked out. So it's okay. Stay within your risk parameters. Make sure, remember, we didn't even risk 150 points, $150 on that trade. That's within our trading parameters, our risk parameters for our trades. So, we know that. I look at this as, let's see if it's just going to pull back. Is this now where I need to, put my little fib and see if it's pulling back to this 50-61.8 level? We'll definitely see it's coming up here, and we'll look to see if now we're just taking our sells at that point. We get a better price. I'm gonna put it in, and that's just what happens when you put in pending orders. Sometimes you get stopped out. When we get a better price and we take up for, because we're still going to be looking at the same take profit areas. So if the market pulls back, we get a better entry. We're able to take up for those losses, make up for those losses anyways. What time is it? Alrighty, it is 9:03. You guys have your setups for the day. We'll look to see if price buys up to this point here, comes back down to these sells. We have our areas for our buys. We have our areas for our sells. Any questions? Let's see, is Nimsa here? He was asking about the RSI and our settings here. I'll tell him. So I'm just using the stochastic. I believe it's just the default settings. The only thing is that for the style, I've changed it from line to area. That's it. Okay, let's see. All right, so prices now didn't get, thank goodness I didn't get wicked then. Looks like it's going to pull back up here to this point. Price is making lower lows. We'll see if it comes and touches this 50. Let's look at our 3-minute. We want the best price possible, but we want to wait for that confirmation. And so sometimes with that comes us getting wicked into trades. Comes with the game, guys. How are you guys feeling today? How do you guys feel about the market after this class? Do you guys feel a little bit more comfortable getting into trades? Are we understanding what's going on and how we just need to be flexible within our bias and our positions, and kind of keeping an eye out on the higher time frame so that we see, the bigger moves that are happening, but really looking at the lower time frames now more than ever, just because while there might not be great structure there, you're able to see price movement a lot clearer with these contracts. We are with these price movement, we're taking our contract size down, our position size down dramatically, so very, very, we don't want to blow any accounts. We don't want to, over leverage ourselves. We want to get into these great positions. We want to wait till, the market gives us a clue to get in. Right now, as we can see, we're on the 3-minute. It still has buying momentum. So we're seeing that it might come up here to our 50%. That's a pullback area for us to continue with this sell. All right, it's still buying up here. It's going to touch that area. I'm just kind of following it here because as we can see, these are 3-minute candles. Look at this. That baby, it's been wicking all around. Huge movements coming back to that area. So within this market, when you're in this type of market environment, you just either stay out or if you're in, definitely not trading the New York session right when all those orders are in, giving the market a second to calm down and just seeing how your analysis plays out and trusting. If you have areas that say, if price breaks below here, I'm getting in for this sell. This confirms this. If price breaks this area, this confirms a buy. And sticking to those areas. Don't get confused by, huge price movements. Follow the smaller time frames. If you were comfortable, getting into this buy here for this pullback till it came up here, that's a significant amount of points. If you want to play it safe and wait for the trending trades, the selling trades to present themselves, such as that, do that as well. However you're playing this market, just make sure you stick to that plan. And we're not switching it up midway. If we lose a trade, now we're like, oh, no, I'm not going to scalp. I'm going to go up to the 3 minutes. I'm not going to be, no. Be consistent. Don't let all this movement, get you sidetracked or too excited. Or you even, you see movements like this and you're like, knowing you should have been trading with 2 contracts. Now you're like, oh no, let me put 5 on real quick. I need to catch this movement. And then you come right over here and then it pulls back, 10, 20 points. And now you're like, wait, what? And now you're in and out. Don't do that. Stick with your plan. Stay consistent. Don't let this market fool you. That's it. That's all we got to do. All right. We see markets touch this 61.8 level. We want to wait for this new candle to come out in 30 seconds. See how it plays here. This is our 800 EMA. It's just red on this side. Oh, no. I'm sorry. That was our, this is our 200 EMA. Where's our 800? Oh, down here. Sorry. Oh, we're on the 3 minute. Okay. 3 minute time frame came out. 3 minute candle came out.
Order filled.
All right. I got my entry here at the 61.8 level. I'm moving my stop up above here. Probably, sorry. Comes above this wick. I'm not trying to risk more than 150 in a trade. Still trying to give myself some room. Still keeping the same profit targets. Now that I got this better entry, instead of entering up here, remember one of our TP1 was 53.60, TP2, 53.50, and so on and so forth. So I'm going to just take this trade with my TP1, just trying to make up for this loss here and get back into the green. Keep an eye out on your lower time frames just to see how the market's going to play at those levels. We're still breaking out of this box. Remember, we had this range. This yellow box was our range that we were looking for price to make a significant breakout of. This was just a smaller range. It really should be kind of like this, all this kind of movement here. Made a tighter range, but whatever you're looking at, because I could be seeing something that you're not seeing, and vice versa. All righty, guys. Thank you so much for tuning in. I will see you guys next Wednesday. I have an exciting announcement for next class, so I hope to see you guys at 8 a.m. Next Wednesday, where we do it all over again. You guys have a great day. You're